Good morning, you've tuned into ET Now. This is Buy Now, Sell Now with me, Karunya Rao and Varun Hiramat. Let's kick off the show by taking a look at the top headlines at the top of this hour. It has to be HDFC Bank, which is leading the market's rally today. You have RIL as well contributing to the up move. Nifty is firmly back above that 11,000 mark, and the market recovery after a couple of days of weakness is the biggest headline that we should watch out for, followed by HDFC Bank, of course, which is at the day's high. You have RBI approving the appointment of S Jagdishan as the HDFC Bank CEO. He will be replacing, or rather succeeding, Aditya Puri at the top deck of HDFC Bank. We'll get you more details through the course of the show, of course. You have some updates coming in as far as Aatmanirbhar Bharat goes. The government is looking to drive in manufacturing policy for auto components. It's something we're picking up from sources right now. The action plan may include framework schemes, fiscal monetary support as well to boost manufacturing, production-linked incentive scheme for autos as well as EV components. Commerce Ministry is also setting up a steering committee. You have the likes of Pawan, Goenka, Sheshagiri in this Aatmanirbhar committee. These are all the updates that we have that we are picking up from highly reliable sources. It's a big ET Now exclusive. And talking about cars coming back, or rather auto sector coming back to business, top car makers are targeting further increase in production. Another ET Now story that we've been tracking. M&M is eyeing a 20% jump in production to around 12,000 units, something that sources are telling us. Maruti is looking to produce 1.2 lakh units, a jump of close to 20% as well. Tamo is also eyeing to produce more than 15,000 units from 3 of their plants. On the earnings radar today, you have a lot of mid-caps to watch out for. There's GCPL, Tata Beverages, PI Industries, Dixon Technologies. These are some buzzing names as well in trade. Many of them are charging up quite smartly ahead of their numbers. So these are the ones to watch out for. And finally, on the America First, you have Trump signing executive order to restrict H-1B visa use. So these are the top headlines. Varun, take it away for COVID Corner.
Right, Karunya. So the COVID headlines, as we've been bringing you every day, let's begin with the fact that COVID cases in India have crossed the 18.5 lakh mark. The second wave of virus is unpredictable, says ICMR. Former Karnataka CM Siddaramaiah tests positive for COVID-19. Mumbai to reopen malls and market complexes tomorrow. Jubilant Life Sciences launches remdesivir in India. West Bengal revises lockdown dates for August. BCCI to form COVID task force and Dravid to lead. No silver bullet present to cure COVID-19, says the WHO. Hong Kong witnesses a drop in new virus cases, and Spain to roll out new contact tracing app. All right, now let's come back to what Karunya was earlier pointing out. The biggest story of this morning and the biggest index mover this morning, you have HDFC Bank up a solid nearly 5%. And that's on the back of the news that the successor cloud is now over. There's an official exchange filing. It was source-based till earlier this morning. S Jagdishan has been approved by the RBI to take over HDFC Bank as MD and CEO from Mr. Aditya Puri. This was something that there was a lot of talk about. Aditya Puri had hinted at the AGM that the next successor was someone who was always proper and fit in his mind, someone who had spent 25 years at the franchise doing various roles, from being initially in the finance team to head of finance, to then graduating to CFO, and today holding a whole host of other positions related to strategy, CSR, HR. So it's a person who's played a diversified role over a longer tenure of 25 years, and that's really the vote of confidence that the senior leadership of HDFC Bank is giving, as well as the RBI. So that overhang now clearly away from HDFC, but we have two guests with us, Deepa Mehta and I believe Someone from Share Khan is also with us. Thank you, gentlemen, for joining in. Deepam, let's come to you first. What are the implications of this kind of a move, and how big of an overhang was this really? Is it being priced in fully right now, or do you feel there's more room for the stock to move based on this information?
See, I think in times like this, when a lot of the banking shares in HDFC Bank included are under cloud because of the credit costs which may rise in the COVID pandemic, this was an uncertainty which was certainly playing on the minds of the investors. And the fact that a well-known, highly reputed internal candidate has been approved by RBI certainly removes a great deal of uncertainty. And the uncertainty had got heightened in the past few days with the sale of shares Mr. Aditya Puri. So there was a bit of a confusion as to why he would sell off his holdings. And that has caused a bit of a flurry as far as the stock price was concerned. But now I think all of those things are history. And going forward, HDFC Bank may continue on its same growth trajectory, given that it's a great institution. It has got a lot of internal talent, and one of the senior most directors has been elevated to the post of CEO. So there is continuity. At the same time, there will be a lot of, the same policies of Mr. Puri and the same systems will be carried forward. So one shouldn't expect any major turbulence, which normally takes place when a CEO changes in the bank. And you can go back into the history that whenever CEOs change in the bank, there's always turbulence. So that at least will be avoided in this scenario.
We're also joined by Mr. H.R. Khan, who's the former Deputy RBI Governor. Good morning, sir. Welcome to the show. Thank you so much for talking to us. How big an accomplishment is this for HDFC Bank, and what, in your view, are the key positives, from Sheshagiri Jagdishan that have led him to be nominated and now approved for this role?
No, first of all, it's a good thing that 3 months before the tenure of Mr. Aditya Puri gets over, we have a name in place, and RBI has, I think, accepted the first recommendation of the HDFC board. So that is a good thing that uncertainty is over and that person gets some time for overlap with the existing CEO. And the second thing is RBI must have found him fit and proper. So that gives confidence to the market that an internal candidate has been found suitable by the regulator and they have gone by the recommendation. So that's another positive. And the other thing is that being part of the system for last 24 years, 25 years, he knows ins and outs of the institution and he will know where are the areas which can be further improved. Certainly, he will continue the model which Mr. Puri has been following, but everyone has his own mind. So it's not that he will blindly follow whatever has been done. Probably going forward, wherever there are issues which needs to be looked afresh, certainly he will look afresh. So I say in a sense it will be big continuity with some changes, and changes are also welcome at some point of time. There are lots of challenges before the bank. Bank has been doing well, relatively speaking, even during the time of pandemic. One indication is that apparently single-digit moratorium figure, and the figures what we saw the last quarter in terms of very marginal increase in the gross NPA figure. But there are issues relating to operational risk, some news about retail and car loans, and how do we scale up? And retail loan is going to be a big issue now because of the loss of income and loss of job. Retail may not grow that fast, so you may have to look at corporate finance. I think how do we take that? And how do you take forward the digital initiative which the bank has been taking in a big way? But how do you take it to the next stage? I think these are some of the challenges the new CEO will be able to grapple. And I think given that he has been part of the system and system provides lots of stability, and probably as he feels his fit, he will bring new perspectives. I think it's a good choice, and I think it will be in the safe hands. The bank will be in the safe hands of Mr. Jagdishan.
All right. Do we still have Deepan Mehta with us? Okay, Deepan, hi. Coming back to you, just going by, what Varun had asked you about whether or not this big overhang is now over. What are the kind of things you would want to now focus on as far as the stock is concerned, the fundamentals is concerned, and now with the change of leadership over the next couple of months, how do you, what will be some things that you will be watching out for from an investment standpoint?
I think the most important thing we are watching out for is the rise in NPAs once the moratorium is lifted. See, right now, I think whoever cannot pay and may become an NPA is being classified under moratorium. It's only after the moratorium is lifted will the picture become clearer as to who are the safe customers and who are the ones which are likely to default. And this picture will emerge within 30 to 90 days after moratorium is lifted. And then once the moratorium is lifted and then you have NPAs, then they will immediately start classifying them and providing for them. And I can tell you one thing in my interaction with all the bankers and also the con calls that we have attended, no banker has ever been through a situation like this, like a moratorium or a COVID-19 type of pandemic. And although they are in touch with all their constituents and clients through the relationship managers and otherwise, they don't have a handle on what will be the level of NPAs 30, 60, 90 days from the time the moratorium is lifted. So in the case of HDFC Bank also, as with other banks, now that the leadership position has been solved, all eyes will be on what will be the NPA once moratorium is lifted and how the bank is going to deal with that.
Okay, thanks for that, Deepan. Mr. Khan, coming back to you, given your extensive background and relation with the RBI, could you talk to us about the proper and fit criteria? We keep hearing these two words together, but we know little about what it means from the regulator's standpoint. So what does that really mean and how does he fit in with that criteria?
No, proper fit, somebody should have the experience and expertise in banking. And there should not be any issue relating to conflict of interest or integrity and any issues relating to quote-unquote what is the normally parlance, any vigilance issues. So normally these are all standard protocols. So if somebody has capability, somebody has the ability, and there are no adverse in terms of integrity and other conflict of related issues. So that's what I think the regulator looks at. And normally they will go by the recommendation of the board, because board is a board-driven company. So they will go by the board, and board must have also done due diligence. So RBI goes through recommendation. If there are nothing wrong with this recommendation, normally RBI should approve.
Okay, but just trying to understand, given the vast shoes that need to be filled, HDFC has been one of the best performers and it's really created so much value. It also trades at a fairly expensive valuation. So Deepan, perhaps you'd be the better person to answer this particular question. How important is it that the next person who comes on board is, like Mr. Khan was just saying, up to the respective corporate governance standards and also has no blemishes, so to speak, on that front, versus his capability to be a good manager at the bank?
See, I think first of all, HDFC Bank is an institution, and over the last 25 years or so, they have navigated through so many threats and have grabbed all the various opportunities they can. One has always ranked integrity and fair play highest amongst HDFC Bank. It has been absolutely institutionalized over there. And considering that they have an internal candidate who has been part and parcel of building that kind of a legacy, I don't think that there should be much of an issue in terms of all these other risk factors which you just described. And on the whole, if it was an external candidate, then there would have been some transition time and, acceptance of that candidate by other senior management would have had its own risk factors. So all those risks are now out of the window. Everybody knows who the person is, and the other senior management have great deal of comfort when it is an internal candidate. They know what kind of a CEO they are dealing with. So there'll be hardly any upheaval as far as all the top positions within the banks are concerned. So this is a best case scenario, I would say, for HDFC Bank. And I think that whatever tradition and system which have been set by Mr. Aditya Puri, Mr. Sheshagiri has been inner circle and part of those steps that the bank has taken over the decade. And this is a great outcome for the employees, for the customers, and more importantly, even for the shareholders. I mean, what more can we expect that there's the same kind of exceptional growth which HDFC Bank has got for the last 25 years will now be continued. Of course, there are other challenges like the bank size has become very big, so base effect will come into place. The external environment, as we all know, is very, very fluid at this point of time, so those challenges are also there. But there are a great deal of resources as far as HDFC Bank is concerned. They have the brand, and now we are seeing that there is a huge deal of flight to quality as far as depositors are concerned. They benefit from that trend as well. Balance sheet is of the size that can take many, many minor shocks, unlike some of the other balance sheets, and have the adequate capital and ability to raise capital to increase growth rates when the opportunities arise. So I think all of the, what am I saying, is being reflected in the stock price, which is the best performer at this point of time, up almost 4% or so.
Thank you so much. It's always great to get perspective. Mr. Khan, thank you as well for joining in this morning to discuss this major development that's clearly got the market excited. If you look at that HDFC stock price, and also now a huge overhang disappearing from that counter. So thank you, both you gentlemen, for sharing your perspective with us. Let's now quickly switch gears onto another pretty key company, Indigo. And Indigo's flight ticket offers have come under the DGCA radar. This is after SpiceJet highlighted that the violation of norms has occurred in a letter to the Aviation Authority. Utkarsh is now joining in. Utkarsh, what exactly is the violation and how serious are the implications for Indigo?
Remember, yesterday morning, SpiceJet went ahead and went ahead with an offer saying 1+1 tickets, in which you will get one more ticket voucher of the amount of the base price which you have booked. Now, DGCA had asked question to SpiceJet. In the response, SpiceJet had clearly mentioned that Indigo also is violating the same rules. In fact, they are offering cashback on their flight tickets, and that is similar to what we are doing. And given the fact that they have been allowed, we should also be allowed. Now, DGCA went ahead and asked them to stop. And because of the fact that DGCA has not given SpiceJet the permission to go ahead, now we have been told that DGCA is now inquiring on the cashback offer of Indigo as well. We have been told by our top sources in DGCA that they can ask Indigo also to, firstly, provide a clarification of how is it that this is not a violation of the norm. And if they're not satisfied, they can also go ahead and ask Indigo to cancel the offer. Now, remember that these are things which are being done by airlines at this point of time to get quick money. Remember, if you're booking for a flight which is in March today, till March, that money remains with the company. And in these times where airlines need cash, these offers and bulk sales provide a lot of comfort when it comes to the working capital, especially in the short term. SpiceJet badly wanted it. Unfortunately, they were not able to go ahead with the offer as DGCA stepped in. They'll have to look at something else. But they had pointed out fingers at the Indigo offer, and now that is under the radar of the DGCA.
All right, Utkarsh, thanks for joining us with that update. Slipping into a break here, we'll discuss more stock ideas and queries when we come back. Stay tuned. Welcome back. You're still watching Buy Now, Sell Now on ET Now. Let's quickly pull up how the markets are doing. If you could see the chart of the Nifty 50 index, a fantastic 130 points up move, hovering at the day's high at 11,037. You have Sensex gain in the excess of 500 points. Broader markets also picking up steam. You have small cap index gain more than 1%. Mid cap is also inching towards a similar quantum of gains coming in. Of course, it's the banking index and the banking names which are leading the rally. single-handedly being pulled up by an HDFC Bank. Nifty Bank is up 338 points. Nifty Auto is up 1.4%. You have Nifty Metal Index, Nifty Private Banks, some names from the NBFC and financial names as well, looking quite smart in trade. Pulling up the BNSN stock cloud real quick to understand all the stocks that you need to watch out for in today's trading session. It has to start with an HDFC Bank. Look at the up move the stock is witnessing right now, gaining in the excess of 4.5%, followed by the likes of D-Mart. They delivered their annual report last evening. Good commentary coming over the long-term targets and long-term plans which remain intact despite the challenges that they faced in the near term. You have a Reliance Industries as well, looking quite upbeat in trade. It's one of the top gainers on the Nifty 50 index, followed by the likes of Nexite Industries. The numbers were not that impressive, but the street perhaps seems quite enthused by the company's long-term prospects. You have an Alembic Pharma in focus, gaining as well in trade. They've announced details of their QIP last evening. Another stock from the Nifty 50 index to watch out for is a Tata Motors. You had the annual report yesterday. They've talked about looking for a strategic partner for the PV business, and that's exactly what we saw in an ET report as well this morning, and Tata Motors in focus on back of that. Talking about some earnings candidates, then you have a BSE sulking in trade, pretty weak set of numbers delivered for the quarter gone by. And from the names which are yet to deliver their numbers, you have Dixon Technologies and Varun Beverages both looking very, very upbeat ahead of their numbers. Finally, on the BNSN stock cloud, you also have a KEC, which is up about 1.5% in trade after winning that 1,100 crore contract, which was reported on the exchanges last evening. All the stocks that are important to keep on your radar this morning. Let me take it across to our guests. Then you have Kunal Bothra as well as Shahina Mukaddam joining us as always to help our viewers out and share their top favorite picks from the markets with us. Hi guys, good morning. Kunal, coming first to you. Would you want to talk about how Nifty Bank is playing out right now and even the benchmark index Nifty 50? Given the solid rebound that they're witnessing from the weak pattern that we've been seeing over the last couple of sessions, what do you make of it? Is this a temporary phenomenon, or should we once again be back on our growth trajectory and continue this uptick?
So, good morning, Karunya. First of all, I think it's a good move for the Bank Nifty. And the fact that it's been led by a lot of these private sector banks, HDFC Bank, ICICI Bank to that extent as well, I think it's a very positive sign. And it's coming at the right time. So I think more than the market internals is the timing of the Bank Nifty as well, because until yesterday the Nifty was tottering below that 11,000 mark. There was a lot of circumspect environment which is building in that whether the index now come back into a downward spiral or not. So I think it's the resurgence of Bank Nifty is coming back at the right time. I think that should be a good positive for the overall market. So yes, the Bank Nifty is up higher. It's not even covered up the entire loss of yesterday. So and still a lot of the stocks on the private sector banks, they've managed to cross back about their yesterday's highs. So you can probably gauge that if these stocks manage to gain more strength, then there should be more upside for Bank Nifty over the next trading session itself. If not from a slightly short to medium view. So I believe in that regards, traders should maintain their long stance on the indices, and the Bank Nifty continues to outperform or show signs of outperformance what we're seeing today, then I believe that there should be more room on upside for both of these indices.
And Kunal, you're also recommending a big bank as well in trade today. Can you tell us how the charts are playing out for that one and the other pick that you have for us?
Exactly, Karunya. So I believe that over the next couple of weeks, the banking names and the banking stocks should do pretty well for themselves. ICICI Bank is what I've picked up as one of the buys. So I think the good part about the stock right now is that it's at the lower end of the price curve. So when you look at the price pattern, it's been trading in a channel kind of a pattern, and it's now available at the lower end of the trading curve. So I think in that regards, the risk reward as well is fairly attractive for ICICI Bank at current levels. Would suggest a buy with 380 as a potential target, and stop loss could be kept at 335. The second would be a buy on Siemens. I think even this stock is now showing signs of some life yet again. In the month of June, mid somewhere, the stock had showed signs of a potential breakout around the 1200 mark. It failed to do it. It went back below that 12, 11, 20 kind of levels. So it retraced almost 5-6% from those zone. And now it's making a good comeback yet again. So I think at current levels, Siemens also looks fairly attractive to me. Would look out for targets of 1200 plus in the near term, and stop loss could be trailed higher to 1150.
Okay, thanks for that, Kunal. Shaina, hi, good morning. Let's also get you on board. What are your picks for today?
Of course, today is the day for banking. We've seen a good short covering and a bounce across the board, especially with HDFC Bank supporting the movement. But I will go for a medium to longer term bet with FMCG stocks as of today as my buy picks. I think the numbers that came out were, for most of the companies, were better than expected. Yes, all of them have been affected by COVID disruptions in manufacture, as well as, of course, in at the end supply chain. But at the same time, I think the numbers were pretty healthy. So the two picks for today would be one with the results were already out for Colgate, and the second one would be the numbers which I expected today, which is good with consumer. In Colgate, I think the numbers were much better than market expectations. So while we've seen a decline in revenues, they were driven by the toothpaste brand, which is really showing the strength of the brand. And of course, margins were supported by lower ad costs. But I think that shows the flexibility that these strong brands have to support their profits as and when necessary. So the first one would be that I would go with Colgate with a buy target of 1,600, stop loss of 1,370. But of course, these are little longer term bets, 6 months to 1 year. The second one, as I mentioned, would be Godrej Consumer. There again, I think today the results, we may see single digit lower or mid single digit growth in revenues. That also would be volume driven. But I think what the company has done in the last 3 months, as we've heard from the management commentary, is that they've introduced a number of new products. I think they've given us a number of 14 new products, and they've come out with a strong new brand, Protect, which I believe they are planning to drive growth going forward. Both the stocks, the valuations are not cheap, but I would pick both of them for a medium to longer term investment portfolio.
Okay, great, Shaina. Thank you for that. Kunal, let's come back to you for our first query. It's from Padma Shetty of Pune, and she'd like to know if it's a good time to buy IndusInd Bank. So what do you have to say about that, given that it's not even one of the larger private banks, but I mean, today seems to be a winning day for the Bank Nifty. What's your view on this overall?
We place it in the context of whether the Bank Nifty is going to give a strong breakout from here or not. And if that happens, then all of the private sector banks generally, I think it's about stages. So the first stage could be led by the large cap, or the ones which are leaders in terms of price rally. So you probably have names like HDFC Bank, ICICI Bank fall in that kind of a category. And then maybe the other slight underperformers, or the second rung of large cap names, they could try and outperform. So that could probably be the likes of Axis Bank, IndusInd Bank, etc. But yes, I believe that the next couple of months, there is a strong possibility that Bank Nifty could outperform. There is this wave of short which is happening to the Bank Nifty. So when markets go into a strong uptrend kind of a mode, there is always a result of short covering which happens into this stock. So when you look at the entire sectors as well, Bank Nifty or the banking stocks are probably one of the major spaces where shorts are still hiding. And generally, when there is a short covering rally, you see a spikier up move into these kind of names. So I think in that regards, there should be a decent upside for Bank Nifty overall. And I believe IndusInd Bank could also rally in that regards. But then the question which you have to ask is that whether IndusInd Bank is one of the strongest bank, and that can give you more solidity as well, assuming if the market takes a bit of a corrective phase or not. Then I believe then the answer to that would be a bit no. My first preference is, of course, the large cap private sector banks like HDFC Bank and ICICI Bank. But then the second priority would be the likes of IndusInd Bank and Axis Bank as
All right, thanks for that, Kunal. So definitely heed your point of view there. The larger private banks do feel a lot safer at this point in time. But Shaina, coming to you from a fundamental perspective, they've just completed fundraise also, and the promoters putting up a large portion. 1/4 of the fundraise was being funded by the promoter. So that's always a good sign. And given where IndusInd's still trading at, I'd say it's much cheaper than the other peers out there. So what are your thoughts?
I totally agree with you, Varun. Basically, I would go with what Kunal has said. Always my top picks have been the larger banks like HDFC Bank, ICICI Bank. But if I look at where IndusInd Bank is today, I would say you can buy IndusInd Bank. One is because, see, the stock has corrected because of the QIP in which the promoters are actually putting in the chunk of the money, and with one or two other good, strong names. So one is, on one hand, they have got promoter interest, which is, when this sort of thing happens, we do see some sort of correction in the price because, the promoters would definitely like to pick it up at the best price possible. Having said that, I think at current levels, I would be buying IndusInd Bank because at the valuation of one-time book. Also, if you saw the numbers, they were pretty healthy. There was a growth in NI and it supported a better margin. There was an improvement in provision coverage. I think all these things, work for the better of the medium to longer term. So if I was a buyer, I would, keep picking IndusInd Bank. Any dips that I see, as we are seeing now, despite the other bank rally, I would be buying IndusInd Bank. I would invest.
Okay, so it's a thumbs up coming in on IndusInd Bank. Moving on to query number 2. Swati Nair writes to us from Chennai. She wants our views on, or our experts' views rather, on Alkem Labs. Kunal, coming first to you. The last 1 month, the stock has seen a very solid run up from 2,300 levels to now trading close to 2,900. Do you think it has more room for growth from the current levels, or should she wait for some dips to come in and then perhaps look at investing here?
Well, I think you should start buying and then maybe wait for some sort of dip, from your purchase price. Because generally, what happens is, the reason why many investors and traders have missed out on the pharma rally is because they were hoping for some sort of a decent correction to shape up into these stocks, but the correction has failed to come. I think it's just that these stocks have gone through a bit of a price, consolidation, where the stocks had gone through a lull phase. That lull phase doesn't really attract buyers to try and buy on dips, because they believe that quicker returns should probably be in the offing for these stocks yet again. So I think in that regards, I don't sense that stocks can go through a big price correction. And look at it in the context that the pharma stocks or the pharma sector is going through a big recovery phase. And this recovery phase is not here to last for maybe a couple of weeks or a couple of months. And I think I've been very vocal about it since last 3 months as well, that how many of the pharma stocks and the pharma indices have given some long-term breakouts on the charts, and that's after almost 4.5 years of downtrend for these stocks. And generally, these kind of downtrend results into a multi-year uptrend for these kind of sectors. So I think in that regards, this pharma sector and the pharma rally is here to sustain from a longer term view as well. Now the only catch is that whether you want to buy stocks which have shot up significantly higher with huge amount of quantity, I think you should not do it. Maybe have 1/3 of your investments which you're planning to do on the stocks like Alkem Labs at current levels, and then wait for sizable amount of correction. If that happens along the way, then you can probably look to add on further. If the correction doesn't happen and the stock keeps on moving up higher, then even buying on highs or averaging on the prices as well would be a decent approach.
Do you concur with Kunal's views? Are there enough levers in place for an Alkem Labs to continue to perform well from here on?
Yeah, I would agree with Kunal. I think there are a lot of levers in terms of the sector being in limelight. You have very good performance on the fundamental front in terms of earnings growth coming in from Alkem. They've shown a very strong performance in FY20, and there is no reason why they would not continue to do so. We are expecting at least a 20% growth in profitability over the next 2 years. Having said that, I think the stock has rallied a lot. If you see in terms of valuation, I would expect FY21 they would do an earnings of about 110 rupees. At that level, currently it's available at 26p, which is more or less in line with other large pharma companies. So for Alkem, I'm definitely a buyer, but I would be waiting for some dips. I think the stock has really rallied. I would wait for some dips to add. So my simple point is, I don't think I would rush into buying today, but it's a strong company, 67, almost two-thirds of its revenues coming from the domestic market. And with the government pushing for domestic production of bulk drugs, of APIs, I think Alkem stands in a very good position to capitalize on the growth going forward, the evolving growth. So I would be a buyer. Keep watching it for dips. I think the stock rally has been too fast. Wait for dips and you can keep adding.
Okay, thanks for that, Shaina. Quite upbeat on the stock, I'd say. Let's move on then with our next query. And that is from Dheeraj Malani of Mumbai. And he's bought 100 shares of Godrej Consumer GCPL at 600 rupees per share. Should I hold or book profits? So, Kunal, let's come to you first. What should he do?
I think you should definitely hold. If you bought at a price point of 600, then you have a lot of safety cushion for the stock price already built in. The stock trend has been quite strong, quite visible, and we've seen the recovery in the last few months for Godrej consumers from 600, sub 600 levels to 700 or 720, with the stock tested just about a few weeks back. So I think in that regard, it's a strong stock. It's been showing the resilience and the strength, quite visibly. It's just that the stock has gone through a bit of a sideways range. I think when the stock goes through a rise of almost 30-40% and then remains sideways for a couple of months without showing any major price retracement, I think that should be taken as a positive sign. So in the overall context, the chart patterns for Godrej consumers to me look fairly attractive. In fact, yesterday, if I'm not wrong, I had even given a buy call on Godrej consumers, expecting that the stock will come back to those 740, 745 kind of levels in the very near term. So both from a near-term view as well as from a medium-term view, I would suggest that you should go.
Right, great. So Kunal has a strong hold on that. Shaina, how do you feel about GCPL?
I also will concur. I have a buy on. In fact, it was one of my picks for the day. I mean, for this, for the wealth creation ideas for today. And what I like about it is that the segments that the company is in and the way they are building up on those segments, they are into household insecticides, which is doing well. They are adding on to the hygiene products, home hygiene products, which I believe should do very well going forward. The new product should add to the new pipeline will add to their revenues going forward. So today, I don't think the numbers are going to be very exciting, which is what we are seeing in today's stock, the stock price slight correction. But I would sort of overlook it. Even if the company is able to report low single digit volume growth, I would hang on to it because I believe the growth will pick up in the second half as and when things get resolved on the mobility issues regarding COVID.
For that, and I think that brings us to the end of our query section. So thank you to you both, Kunal and Shaina, for joining us this morning. Always great to get perspective from you. But we were just talking about GCPL. That was the last talk on the queries end, and we now have Vinny joining in to walk us through to what to expect for the GCPL numbers that will soon be out. Let's listen in.
GCPL is set to post its Q1 FY21 numbers, and in terms of revenues, we are expecting only a marginal decline of 2.5%, and the revenues will stand at 2,289 crores. Now, marginal decline, so that's a positive sign because despite the lockdown, only a 2.5% decline is a positive sign for the company. Talking about the profits of the company, we are expecting a sharper decline of 24.4% in terms of profits, and the profits will stand at 208 crores versus 407 crores on a year-on-year basis. Also, the margins of the company, they have seen a slight expansion of around 100 basis points, and margins will stand at 20.3% versus 19.3%. Now, domestic volume growth, which is a very important number, the company in its Q1 update did say that we will see a mid-single-digit volume growth, so we could expect around a 4 to 5% volume growth for GCPL this time around. And this strong volume growth is mainly led by the strong momentum in HI segment as well as the hygiene category. So this is what is leading the growth for the company. These two segments are the drivers. While discretionary products and items like hair color and air freshener are expected to remain muted during the quarter. Now, on the international market front, international business front, it's a mixed trend that we are seeing. In terms of Indonesia, it's expected to see a good growth, while for Africa, it's expected to see a sharp decline. So, mixed trend in terms of international business. While in terms of the margins, we are expecting, like I said, an expansion of 100 basis points. This is mainly due to the ad and promotion spends which have reduced, as well as the cost-saving measures by the company. That is something leading to the margin growth at this time and expansion in the margins. Now, other factors that we watch out for is the commentary on any lockdown impact further. What is the working capital like, and any strategies and what is the current supply chain situation, as well as the capacity utilization levels of the company. So we keep a close eye on all these situations, as well as anything else on the hygiene expansion front from the company. And let's see how GCPL actually performs today.
All right, Vinny, thanks for giving us that update. GCPL, meanwhile, ahead of its numbers, trading week lower by about 1.5%. Moving on to some ET Now insights. How have analysts revised their target prices for the month of July? Jayesh is here to give us the details on that. Jayesh.
The analysts were positioned on the bullish side because if you have a look at the stocks that are tracked by at least 10 analysts, there are 280 such stocks, out of which 69% of them saw a target price upgrade for the month of July itself, while you had 28% stocks that were downgraded and 3% stocks where the target price was unchanged as far as the entire month of July is concerned. But also, if you have a look at the sectoral picture, there were no sectors which were downgraded, and on the flip side, the upgrades came in for technology, more than 23% upgrade for that sector, followed by energy, 10% upgrade, and then you had the likes of financials, materials, industrials, as well as the consumer space that saw single-digit upgrades as far as the entire sector is concerned. But moving on, let's also have a look at the stock-specific action and the individual upgrades and downgrades that actually happened. The top 5 stock upgrades include the likes of Bajaj Twins, which were upgraded more than 20%, and then you had IT participation, the likes of Infosys as well as L&T Infotech, once again more than 25% upgrade for the month itself. And lastly, you had Reliance Industries, which also saw a 20% upgrade in its target price during the month of July itself. As far as downgrades are concerned, you had a lot of high beta names, but the index name that actually stood out was Z Entertainment, more than double-digit downgrade for that stock. And then you had financial names like Union Bank of India, PNB as well,